Well, good morning, Jagendra Rana here. Topic of the day is Insurance Laws Amendment Bill. Insurance Laws Amendment Bill. The government meant to do its bill for amendment of the Insurance Act 1938 in Parliament during the upcoming session. The aim is to achieve insurance for all by 2047. Some provisions being proposed in the amendment bill include composite license, different capital, reduction in solvency norms, issuing captive license, change in investment regulations, one-time registration for intermediaries, and allowing insurers to distribute other financial products sources. Means distribute other financial products also. So the draft bill is completed and will be sent to the Union Cabinet for approval once done. The Finance Ministry hopes to bring it in the upcoming session. Insurers expect the proposed amendment bill to boost growth of the sector and customer engagement as it will open the market to a large extent. Industry leaders are discussing the future of the sector and discussing what next. Currently, relations with customers are purely transactional. However, going forward, post the amendment bill, customer engagement will become more than that. It will be on the back of value-added services which will be included in the bill. So in the initial concept of insurance amendment bill, value-added services are included, and that can be a big shift if it happens. That way you can present your options to consumers. Today you can only sell pure insurance products with value-added services. You can then sell other related services to the poor category. For health insurance, there are related health services. For retirement, you can offer lots of other retirement services. These don't necessarily have that core competent or core component of the insurance, but it is clearly related to the core offering, and the whole offering as a combination becomes much more attractive. So one of the problems with insurance is that it is a very episodal engagement. But if these services starts coming in, the customer will feel that I am getting something back for what I have paid. I think that is the big one that we are seeing. The engagement has to be higher rather than making a transaction. Today it's a transaction, not an engagement, and that is where the customer experience also changes. See, there are only 4 steps. If you ask me about the lifestyle of a customer, I buy, I renew, or I cancel. So these are the transactions which happen. The overall insurance penetration stood at 4.2% in 23 from 4% in 22. But the non-life insurance sector stood at 1% for both years. Out of this, the retail health insurance penetration stood at 4%, and it can be further boosted by reducing healthcare and distribution costs. Moreover, the missing middle in the country find health insurance unaffordable. The value added services can make a big difference for them. This is because they cannot afford higher sum insured products. Introducing variants in health insurance products will solve problems of affordability in regions beyond the metro cities. Affordability is especially felt among the underprivileged people for locations of metros, Tier 2, Tier 3, and Tier 4 cities. To achieve this, we have seen variants of health insurance, low sum insured, high benefit health products. We have seen in Tier 2 and Tier 4 locations of take of health insurance products rising, and sum insured is very low. So it makes sense for insurers to reach out to them and the locations, as this helps us in achieving two objectives: insurance inclusion and making sure that loss ratios remains low and products are tailor-made in such a way that they remain affordable. I don't see affordability issue in high-end markets. So variants of health insurance products are able to address the situation of affordability in rural areas. However, health insurance faces several challenges, including grievance during claim settlement and fraudulent claims. The health insurance is not necessarily about mis-selling. Most of the times it is not the intent of the distributor. Health insurance has the element of medical complexity. My only plea to everyone involved in this sales process is that all stakeholders should ensure that the customers understand what is being sold to them. This will solve most of the grievances. With the use of technology, frauds have definitely come down. So maximum claims take place in the health segment. Some people also manufacture claims leading to frauds. What we have experienced in our business is that such frauds have come down over a period of time because of the use of technology. So, in our case, the license has to be renewed every 3 years. So that is the process, and probably business continuity is being hampered because of the lack of process and all that. So probably if this goes through, the distribution will get a new flip. There's a lot of investment which will come into the broker segment. Broker segment. So move this move will enable entry of differentiated insurance companies similar to how the banking sector functions, that is universal bank, small finances bank and payment banks. So the draft bill is completed and will be sent to the Union Cabinet for approval. The provisions of composite license would allow life insurers to underwrite health insurance or general insurance policies. Because at present the sector regulator, that is Insurance Regulatory and Development Authority of India, does not allow composite licensing for insurance companies, which means that an insurance company cannot offer both life and non-life products as one entity. So as per the provisions of the Insurance Act 1938, life insurance can only offer life insurance covers, while general insurance can offer non-insurance products like health, motor, fire, marine, etc. So easing of capital norms allow the entry of companies focused on micro insurance, agriculture insurance or insurance firms with a regional approach. So the proposed amendment primarily focus on enhancing the policyholders' interest, improving returns to the policyholders, facilitating the entry of more players leading to economic growth and employment generations, enhancing efficiencies of the insurance industry, operational as well as financial and enabling ease of doing business. India at present has 25 life insurance firms and 32 non-life of general insurance companies. 32 non-life general insurance companies. Now the affordability is especially felt among the underprivileged people of far locations of metro, tier 2 and tier 3 and tier 4 cities. So with the use of technology, frauds have definitely come down. Maximum claims take place in the health segment. Some people also manufacture claims leading to frauds. The importance of getting perpetual license for insurance distribution is very important today. And this should happen because the amendment bill is expected in the upcoming session. That will open the door to many new insurers. And not only that, with the passing of the amendment bill, lot many things will come into the place and will prove the game changer. Will prove the game changer. Because the government is likely to introduce this bill seeking amendment to the Insurance Act 1938. Some of the provisions which could be part of the amendment bill include composite license, differential capital, reduction in solvency norms, issuing captive license, changes in investment regulations, one-time registration for intermediaries, and allow insurers to distribute other financial products. Because as of date, the IRDA does not allow composite licensing for insurance companies, which means that an insurance company cannot offer both life and non-life products as one entity. So the proposed amendments primarily focus on enhancing the policyholders' interest, improving returns to the policyholders, facilitating the entry of more players, leading to economic growth and employment generations, enhancing efficiency of the insurance industry, operational as well as financial, and enabling ease of doing business. So the Finance Ministry has invited comments on the proposed amendment to the Insurance Act 1938 and the Insurance Regulatory Development Act 1999. The Insurance Act 1938 serves as the principal act to provide the legislative framework for insurance in India. It provides the framework for the functioning of insurance businesses and regulate the relationship between an insurer, its policyholder, shareholders, and the regulator, Insurance Regulatory and Development Authority of India. So the easing of capital norms can allow the entry of companies focused on microinsurance, agriculture insurance, or insurance firms with a regional approach. The entry of more players in the sector would not only push penetration but result in greater job creation across India. So let us see in the next session if the bill goes for approval and the developments comes in, because the government is likely to introduce bill seeking amendment to the Insurance Act 1938 during a during the upcoming session to achieve insurance for all by 2047. Thank you. Thank you.